Wall Street climbs as US inflation data bolsters rate cut expectations. Burkina Faso unveils its first domestically produced gold bars, making a major economic milestone. And we look at inflation in Czechia, prompting a policy shift and delaying euro adoption. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Wall Street rallied after the US annual inflation rate rose for a second consecutive month, with the Nasdaq reaching a new major milestone. US consumer prices rose 2.7% in November from a previous 2.6% and in line with expectations. The rise was partially influenced by low base effects from last year. Energy costs declined less, food inflation continued to rise, while prices fell much less for new vehicles. Inflation for shelter and transportation slowed, and prices continue to decline for used cars and trucks. On a monthly basis, the CPI rose by 0.3%, the most since April and slightly above October's 0.2%. For more, we're joined by Jamil Ahmed, Chief Analyst at GTC. Good to see you, Jamil. Now, firstly, what do you make of the reading for this month?
I think that it signs, seals, and delivers the message that the Federal Reserve, the US Central Bank, are set to cut interest rates for the third time in 2024 next week. The inflation might have increased a little bit. We talked about the inflation falling to more than a two-year low at 2.4% on an annualized basis in September. Since then, it has increased to 2.6%, and yesterday's reading was 2.7% on an annual basis. However, inflation has come down dramatically from the near 40-year highs that we were at not that long ago. So I think it's pretty much seals the expectations for the Fed to move next week. And in fact, the likelihood is near 95% as of time of this interview. And then following the third interest rate cut in the United States, we then have to look for what 2025 might bring. But I would expect the Fed to pause next year at the early stages and then see how the Trump inauguration, how the trade tariffs and all that develops before the Fed sets its monetary policy course for 2025.
Right, and as you mentioned, this was the last major piece of data before next week's meeting. What can we expect in terms of the future for the Federal Reserve?
Well, let's see what 2025 brings for the world economy and the world environment as a whole. If you look at some of the most recent developments, it's clear that we have Make America Great Again Season 2 coming back into play. We all know how Season 1 developed. It's the movie where the narrative won't change, but we're all going to watch it. We need to see how the trade tariffs, how the America First and Always policies, what impact they have on financial markets, as well as, most importantly, the economy. However, if you look at some of those developments that filtered through last night, it wasn't confirmed, but reports did circulate that the Chinese leadership will be invited to the inauguration. That signals that this trade tariff threats and the narrative might not be as bad as what some are expecting it to be when it comes to trade tariffs on China and that increase on inflation projections. So I expect the Fed, like all of us, to be watching and waiting to see how things develop. And then after Donald Trump is inaugurated once again, we're going to see how the monetary policy and US interest rate policy outlooks develops. But until then, it's pretty much a wait and see.
Right, and at the same time, equities are rebounding from a poor start to the week. What's been making the biggest moves?
Well, the Nasdaq actually hit a new record high. And if you look at the S&P 500, we had as many as a dozen different stocks hitting all-time highs overnight. That include the likes of Netflix, Amazon, those major tech giants. I would say that investors are still gradually gliding towards more record highs for world markets, but we need to be aware that Christmas season is very fastly approaching. And based on I would say the questions we don't have answers for what the 2025 outlook might be, I wouldn't be surprised if we see some profit taken on different global assets, not only on US financial markets, but we could also be looking at the likes of those that have been on a rampage this year, like Bitcoin, cryptocurrencies, precious metals like gold. 2024 will be remembered as a historic level across so many assets, that I do think that between now and the end of 2024, it wouldn't surprise me if we see investors taking some profit on the table and start to diversify their portfolios even further for what 2025 might bring.
All right, Jamil Ahmed, we will have to leave it there. Jamil Ahmed, Chief Analyst at GTC, thank you very much as always. Now, Germany and Serbia are stepping up to shape the future of lithium mining in Europe as the EV market struggles due to plummeting lithium prices. Lara Kulcharslan reports.
German Chancellor Olaf Scholz recently met Serbian President Aleksandar Vučić to explore a partnership on sustainable lithium mining.
What is important for us is the exchange of experiences, German expertise, German knowledge, and cooperation of our mining and geological faculties with the academy here in Freiburg.
Securing raw materials like lithium is critical, not just for Germany, but for Europe as a whole.
The concept of sustainability does not only apply in Germany, it is also important in Serbia. There is a very similar lithium project being planned there, and the European Union would like to participate in the exploration of this major project in the Jadar Valley.
Serbia's Jadar Valley project, a $2.4 billion mining initiative, was reinstated this summer. If completed, it could supply 90% of Europe's lithium needs.
This switch to e-mobility is to succeed. There must be enough lithium for our industry.
But these talks come at a turbulent time for the global lithium industry. Analysts predict a 25% increase in supply this year, followed by another 15% in 2025, contributing to plummeting prices. Prices have dropped 90% since their December 2022 peak, forcing major producers like Mineral Resources and Pilbara Minerals to cut or halt production. Analysts say the total reduction in lithium output could reach 100,000 metric tons in 2024 and climb to 228,000 tons by 2025. China, however, is playing a different game. While some mines close, Chinese battery makers are supporting others, keeping supply chains intact and furthering their global influence. Meanwhile, companies like CATL are teaming up with European automakers like Stellantis to invest in massive battery plants, including a $4.3 billion project in Spain. For Europe, the race is on. The continent must secure lithium supplies to compete in the EV revolution while balancing sustainability and cost. That's why talks between Germany and Serbia are vital. Lara Kulcharslan, TRT World.
Inflation in Czechia is continuing to climb, and officials say the country will move away from its dovish monetary policy. This has made the EU member state even more reluctant to adopt the euro as its local currency. Emre Boz has the details.
Prices for these groceries in Prague are getting a little more expensive, with consumer prices rising 0.1% in November. The overall trend for inflation has been upwards since the beginning of this year. That's why Czech Central Bank Governor Ales Mikl said the institution will soon halt rate cuts. Interest rates have been falling since December last year from 7%, the highest level since 1999, to 4% in November. It's to spur growth by making borrowing cheaper. Economic growth has been grim for 2 years, dipping into the negative range in the third quarter of last year, and it's only recovered 0.4%. One question on every analyst's mind, given that Czechia is an EU member, will it adopt the euro as its currency? Czech authorities fear even more inflation if they adopt the euro, if they re-evaluate prices in line with that currency, and if it strengthens against the Czech koruna in the months ahead, imported goods could become more expensive. And if prices are expected to rise, people might feel the need to buy. Increasing demand leads to more inflation. Becoming a Eurozone member will also mean aligning monetary policy with the European Central Bank. Critics of the decision say the country will lose control of its own monetary policy. President-elect Donald Trump's America First policy has also spooked Europe. More tariffs mean Czech authorities are preparing for even higher prices, making a euro currency transition even more unlikely. Emre Boz, TRT World.
Now, a quick look at some of the other top business stories from around the world. Brazil's central bank has raised rates to 12.25%, higher than expected in a bid to fight inflation. Officials have warned of worsening inflation due to weak government spending. The benchmark rate could rise to 14.25 by March amid fiscal concerns and a weakening currency. Analysts claim the move is necessary but warn of rising debt servicing costs. Australia's jobless rate fell to around 4% in November, reaching an 8-month low. Employment grew stronger than expected, lifting the Australian dollar by 0.6%. This has reduced market expectations for a February rate cut. Meanwhile, policymakers will assess the labour market and inflation data before their next meeting. Tokyo is planning to offer free daycare for all preschool children starting in September to tackle Japan's low birth rate and ease the financial burden on families. Earlier this month, Governor Yuriko Koike also proposed a 4-day working week for government staff to encourage parenthood. Japan faces an aging population and labour shortages, prompting a series of regional policies. And Elon Musk has become the first person to reach $400 billion in net worth. The jump in his wealth was driven by a recent transaction valuing SpaceX at $350 billion and a 70% jump in Tesla shares since US President-elect Donald Trump's win last month. Musk's close ties with Trump have raised concerns about potential advantages for his businesses. Still ahead on the programme, hopes of a fresh start for Ethiopia and Somalia after a deal is reached in Ankara to end a year-long dispute. That and more after the break. Welcome back. We head to West Africa now, where Burkina Faso unveils its first locally produced gold bars. It's a major milestone for the country as it tries to take charge of its gold resources. The move will help boost economic stability, generate jobs and significantly enhance national revenues. Gold mining contributes 16% to Burkina Faso's GDP. It accounts for a staggering 77% of the nation's total exports, and the gold sector drives 22% of government revenues, playing a key role in fiscal policies. The rising gold prices are driven by geopolitical tensions and demand for safe haven assets. For gold-reliant economies, these swings impact revenues and stability for countries like Burkina Faso. Bitcoin, dubbed digital gold, mirrors gold's value movements. Institutional interest in Bitcoin has shifted traditional gold investments. Savvy investors now hedge with both gold and Bitcoin amid uncertainty. Let's get more on this now with Baz Kujerman, CEO and Asset Manager at DHF Capital. Hi there, Baz. Now, firstly, how significant is this move by Burkina Faso to produce its own gold bars in terms of its economic independence?
Yeah, as you mentioned, it is a huge part of their national GDP. Acquiring those 2 extra mines and making their first own gold bar at 10 December this year is a huge milestone. We've seen the producing of gold in this country really drop from almost 76 metric tons in 2021 to 56 metric tons last year. So we hope this year can still have a positive impact. And of course, this move is a huge move for 2025.
And what role does gold production play in creating jobs and improving livelihoods in Burkina Faso?
I think the acquiring of those 2 mines was mainly done also to increase security. This was mainly the reason why the production fell over the last 2-3 years. So by increased security, more local jobs, and of course more focus on this national reserve of gold is great. We only do think that it's important to look into international investors still being interested in investing in the local gold as well.
And with the popularity of cryptocurrencies also on the rise, how is that impacting global gold markets and resource-driven economies?
It's a very big impact. Basically, the gold market has received a huge spike the moment that the Bitcoin ETFs were published earlier this year. we see that investors are seeing cryptocurrency, not only Bitcoin, but multiple cryptocurrencies as a full asset class. And this is something that people diversify in, investment funds diversify in, and hedge fund managers too. So basically, there is a very interesting correlation. And on the other side, funds can only be stored in one location. So yeah, we will see maybe a bit of a rivalry between the gold and the Bitcoin price in the next year.
And gold prices have reached record highs just like cryptocurrencies. What do you see for gold's future? Can it maintain its value as markets evolve?
I think the gold price really moved up this year due to the geopolitical tensions all over the world. Actually, for the last 2 years, starting with the war in Ukraine, later Gaza, and now also Israel. So we do see that the gold prices move up mostly for investors to move into safe havens. Of course, gold dropped the moment of the president election of Donald Trump in the US. Because at that moment, we also expect a very huge year ahead for the stock market in the US. So we're going to see if the gold market price can stay like this. We targeted about $3,000 an ounce for 2025. It is still possible that that slowly rises next year, but the spikes of this year and the percentages of this year are probably not going to continue this rapidly in 2025.
And in terms of turnover, would you encourage gold investment or crypto investment?
I think there are two very different investments. The gold investments are mostly safe haven investments for people to secure a part of their wealth. I think it's very good to have 5 to 10% of anybody's net worth or a fund's wealth in physical gold. Next to that, you have diversified allocation, and cryptocurrency becomes an important asset class to look at.
Okay, Bas Kujiman, we will have to leave it there. Thank you very much for joining us.
Thank you so much for having me.
Now, Turkey has successfully brokered a landmark declaration between Ethiopia and Somalia. It follows a year-long dispute between the two countries over access to the sea. President Recep Tayyip Erdogan congratulated the leaders of Somalia and Ethiopia on the historic breakthrough, which marks a new chapter in their bilateral relations. Balkis Demircan has more.
A turning point in relations between Somalia and Ethiopia. After 8 months of intense diplomatic efforts initiated by Turkey, leaders Abiy Ahmed and Hassan Sheikh Mahmoud shake hands and sign a landmark agreement aimed at resolving their long-standing dispute over Ethiopia's growing ties with Somaliland, which Somalia considers parts of its territory. Ankara played a crucial role in brokering the historic deal, which reaffirms both countries' respect for each other's sovereignty and territorial integrity. Turkish President Recep Tayyip Erdogan has congratulated both countries on reaching a consensus on Wednesday during a joint news conference.
As a result of the confidence that Somalia and Ethiopia have in our country, we have reached an important stage in the Ankara process that we began 8 months ago. By overcoming some resentments and misunderstandings together, we have taken the first step towards a new beginning based on peace and cooperation between Somalia and Ethiopia. With the valuable contributions of both nations, we have agreed on the joint declaration we are presenting today.
The agreement paves the way for Ethiopia's access to the sea, a key issue for the landlocked country, while ensuring Somalia's sovereignty is respected. With the declaration, the two leaders also agreed to set aside past disagreements and work together towards mutual prosperity.
Ethiopia and Somalia are two neighborly countries, and they have mutual interests in cooperating together and building a prosperous future of both our two countries and our two people. We are very much grateful for efforts of Turkey. Somalia, as has been, will remain a true friend of Ethiopia.
I believe that today's constructive discussions will push us into a new year with this spirit of cooperation, friendship, and the willingness to work together instead of against each other. Once again, I thank President Tayyip Recep Erdogan in the people of Turkey, as well as His Excellency Hassan Sheikh for convening this meeting, also for concluding in a win-win approach. I thank you.
The next step involves technical discussions, with Turkey playing a continuing role in the mediation process. As the two nations look to the future, the cooperation between Somalia, Ethiopia, and Turkey could serve as a model for conflict resolution and regional stability. Belkıs Demircan, TRT World.
Turkey's biggest technology and entrepreneurship event, Takeoff 2024, has kicked off in Istanbul. Organised by the Turkish Technology Team Foundation, the annual event has brought together global visionaries, ambitious startups and major investors to foster global collaboration. Rumeysa Chodar has the details.
Innovation and technology have met under one roof at Takeoff Istanbul 2024. Organized by the Turkish Technology Team Foundation, this annual event offers entrepreneurs a platform to connect with investors, network with global peers, and pitch their groundbreaking ideas.
Takeoff is an exciting and dynamic event that helps startups grow and succeed. Actually, our main goal with this event is to connect emerging technology startups with investors, industry leaders, and the technology enthusiasts. At Takeoff Istanbul, we focus on encouraging innovation and supporting the entrepreneurship.
Since its inception in 2018, it has welcomed 1,000 startups from over 100 countries, helping to launch countless success stories in tech and entrepreneurship world. This year, startups from 70 different countries will explore sectors like artificial intelligence, blockchain, digital health, and sustainable energy.
The highlight of this year's event has been Takeoff 20 competition, where the most ambitious startups are vying for the prestigious investment and grant awards. Takeoff Istanbul not only showcases these startups, but also enhances the local entrepreneurship ecosystem while seamlessly connecting it to the global market.
So far, Takeoff Istanbul has distributed over $750,000 in prizes. This year, it's set to raise the bar even higher to empower startups with the promise of $1 million investments. Inspirational speakers from top industries also share their visions to encourage young entrepreneurs to push their limits.
Entrepreneurs in Turkey who are going to change Turkey will be building global businesses. So I am coming to Turkey from Silicon Valley, my home, to meet these entrepreneurs, to inspire them to think bigger. Don't think of a small business. That is the wrong approach. You can do big businesses. The internet is global. Information is global. AI is everywhere. You can access the most powerful AI in the world right here in Turkey. You don't need to go anywhere.
With its focus on innovation and collaboration, Takeoff Istanbul 2024 is set to inspire the entrepreneurial community once again. It's not just about technology, it's about building future together. Rumeysa Chodar, TRT World, Istanbul.
Sending satellites off into space is one thing, but bringing them back is much harder. And left up there, they just become trash or space junk, to be exact. And this has major economic consequences.
As more and more satellites are blasted into orbit and then become obsolete, the space above our planet and around the two space stations up there becomes more crowded, increasing the chance of collisions. Believe it or not, experts say there are around 100 million bits of junk floating around Earth. The Organization for Economic Cooperation and Development estimates that the global value of economic activity in space is worth $191 billion. And as junk increases, so too does the risk to this activity. The negative damage could cost 1.95% of global GDP in the long term if it's not cleared. Analysts say that too much junk up there could lead to the Kessler syndrome. This is when collisions cascade and lead to more self-generative collisions. The impacts on the space economy will be severe. Space applications such as weather forecasting and space-based communications could be lost. And if it becomes too crowded, it may be too risky to invest in this sector. As an example, a newly launched satellite provides services that aids and supports economic productivity. A future where space is too crowded for further projects will make increasing economic growth much harder.
Well, that's all your business news for now. Thanks for watching.